Hi, I'm Misty Palek, President of Palek Bookkeeping, and I solve accounting mysteries every single day. I know I can help your company. Contact me today.
Welcome to today's episode of Palek Bookkeeping's Unsolved Mysteries. Today's topic of the day is cash flow. What does it mean? How does it work? Why is it so important? I read just the other day from Entrepreneur magazine that most startup businesses fail because they don't understand cash flow and they don't have enough of it. So it's kind of back to the principle of just because you have checks, blank checks in your checkbook, doesn't mean you have money. And that's kind of how cash flow works too, even with your bank. You know, even though you have money coming in from all your customers, hopefully, and you don't have too much money going back out, so this is the cash flow definition of money coming in and out of your company, then you should be okay as far as profit. And your profit and loss statement can certainly tell you how much you've made over the month or a certain period of time. But the day-to-day cash flow of, do I have money to pay payroll on Friday? Do I have money to buy a new piece of equipment right now in this specific moment, right? So cash flow tells you how much money you have on hand, okay? So it doesn't have to be anything complicated. You don't have to have a long, drawn-out procedure or process or even a report. I just use Excel, to be honest, and this is my little example here that I made up for cash flow for my clients. They just need to know the basics, right? So on a specific moment in time, this would be their current bank balance. I logged into their bank account, saw what their balance was as of today. Okay, so that takes into account how much money they already have in the bank. Okay, then you have to think about what are the things that are going to be coming out here in the next week or however long you're projecting. If you're looking towards the end of the month of how much money am I going to have at the end of the month left over, then I would need to know, okay, so what are the reoccurring things that you have running through your business? Do you have health insurance, business insurance, advertising? These are just some very typical business expenses. So it takes into account that while I have $10,000 in the bank, I know by the end of the month is what I'm looking at, that I'm going to also have $2,375 come out of my bank account to pay my bills, okay? So you can see that the bank balance is here, and then this sums up all of these different expenses. Sometimes there's more expenses than there is cash incoming. So you have to think about those things too, and that's the reason why a lot of small business or entrepreneurs fail, is just because they don't understand cash flow. We're trying to simplify it today, okay? So the outstanding AR, accounts receivable, these are invoices that you've sent your customers and they have not paid you yet. But you know that you're going to get the money, hopefully. If not, you should probably be calling them and bugging them. So the outstanding accounts receivable goes here, and that's just a number that you know maybe from your accounting software of this is how much I have outstanding, because hopefully you record your deposits often enough to keep up with this. Like, this is always a moving target, but it's always good to know, how much do I have in the bank? You know, just because I have money in there doesn't mean I can spend it. It's probably accounted for somewhere. Doesn't mean that I could pay down debt. It doesn't mean that I could order new stuff. It just means that I have money in the bank. Okay, so cost of goods sold. I talked about this in my balance sheet know-how. Cost of goods sold is really, people get tripped up on it. It is an expense that you get reimbursed for. So for example, subcontractors and labor, I might charge my customers $2,000, but this is how much I have to pay out to my particular subcontractors and laborers. Okay, so this is sort of, it is an expense, but it's usually reimbursed expense most of the time. And hopefully you've marked it up and you're making some money off of it. So what this does is this sums up the cost of goods sold, materials, supplies, equipment, and materials and supplies would be things that I buy for a project. Like if I'm a construction contractor and I need to buy concrete to pour a sidewalk, then the cost of that concrete is going to be reimbursed to me. So that's a cost of goods sold. And you don't have to worry about this, but it just kind of tells you about the, that was for another note. But anyways, okay, so cost of goods sold, it sums it up. And then at the end of the day, you have this current balance. So this is the formula here, current bank balance plus your outstanding AR. So that's your incoming. So it's taking what you already have in the bank and adding to, if you'd gotten paid from all your accounts receivable customers, your $3,000 here, and it adds that to it. So that's incoming. And then it minuses or takes away your outstanding expenses. So these are expenses that you expect to happen in a certain period of time. Like I said earlier, we're looking at the end of the month for this. And then it also takes out your cost of goods sold. So all this money is going to have to go back out to your vendors for the time that they spent helping you complete the job. And at the end of the day, or at the end of the month for this example, we would have $8,925 left in the bank. So that's our cash flow. So we could then project and say, well, you know, I have $8,000. Maybe I'll pay down a credit card. Maybe I'll pay off a different debt that I have. Maybe I can afford to purchase a new copier or a new piece of office equipment, maybe a new computer or something. So it's just kind of, you know, just because you have money in the bank doesn't mean you should spend it. So that's kind of our mystery solved for today. That's cash flow in a nutshell. Thank you for joining me.